people, this is me, Kumaitila Kositile, your money manager. In today's video, I want to address a question that I'm receiving almost every day. I had thought we had dealt with this one, but it still seems like we need to continue doing the empowering and educating because we need to drive the point home. The question that I'm answering today is, how do I make money investing in stocks? To answer this question and also to drive my point home, I am also going to share with you numbers. These are numbers of one of my wealth building partner. She has been investing in stocks for over a long period of time, and she's been able to build a portfolio, and now she's enjoying the fruits of her labor. So I am going to use her numbers to drive my point home. So let's get into it. How do I make money investing in stocks? There are two primary ways of making money investing in stocks. The first one is dividends. Please underline that, dividends. What exactly are dividends? The companies that you invest in. Remember, when you buy shares, you become a shareholder in a company. So when that company is profitable, when it makes profit during the year, the company can decide to declare part of those profits as dividend to the shareholders. The dividends that you are going to receive, these are your returns. They are given to you proportionate to the number of shares that you own. If you own a fewer number of shares, you are more likely to receive an insignificant amount of money as your dividends. But the more you build your portfolio and you have a sizable number of shares, that's when now you are going to see the benefits of investing in stocks. Like I have promised, let me illustrate using my wealth building partner's numbers. Recently, Sechaba, a company listed on the Botswana Stock Exchange, declared dividends. They declared two dividends. Final dividend of 1.727. That's 1.73 Tebe, if I may round it off. And they also declared a special dividend. A special dividend is something that we can look at it as a bonus. That's a bonus dividend. So the company has been doing great. We have built good reserves. Let us just reward our shareholders with a bonus. They call it a special dividend. And that special dividend is 2.517 Tebe. So we add these two, we are going to get our total dividends, and that total dividend is 4.244 Tebe. That's a lot of money. You can just see that's a lot of money. Let's look at what my wealth building partner received. In the same company, Sechaba, she's been able to build a shareholding of 6,037 shares. This is from a period of 2019 to early this year, before the dividends were declared. How do we get the dividends that she received? That is going to be 6,037 shares multiplied by 4.244 Tebe. That is giving us a total of 25,621.3 Tebe. That's the dividends. The dividends were paid on the 15th of May. She received her dividends. Do you get it? That's how you make your money investing in shares. First is through dividends. The second way of making money through shares is what we call capital appreciation. What do we refer to by capital appreciation? I'm sure you've heard buying low, selling high. That's exactly what capital appreciation is. We are referring to growth in the share price. So you bought at a particular price, you wait, and then you sell at a higher price. That's how you make your money. So let's look at the capital appreciation for her shares. She owns 6,037 shares. She bought her shares at an average price of 20.48 Tebe. And what is the current share price? As of yesterday, the share price was trading at 23.10 Tebe. What is her gain? 23.10 Tebe minus the 20.48 Tebe. That's her capital gain. We call it unrealized capital gain. And that capital gain is 2.61 Tebe per share. To get the total capital gain, we are going to multiply it by her total number of shares. So it's going to be 2.61 Tebe multiplied by 6,037 shares. That's her unrealized capital gain, and that is a total of 15,783.69. That's her unrealized gain. We call it unrealized gain because it's just paper gain. She can only realize it if she decides to sell today. That's how much she's going to gain as her capital gain. That's the second way of making money investing in shares. Remember, we said that two primary ways: dividends and capital gain. So as an investor, you decide what exactly you are investing for. Are you investing for dividends, which is going to be your regular income, your passive income, or are you investing for capital gain? So capital gain, you are buying with the anticipation that over time, the share price will grow. When it reaches your desired price or value, you sell, then you realize your money. That's how you make money investing in shares. So in all this, we need to be able to calculate our rate of return for the year. Why is it important to calculate our rate of return for the year? It's important because you need to be able to compare to see whether you are really rewarded, compensated accordingly for your money, or maybe you can take your money and put it in another investment. You do this so you can compare the returns that you are getting on your stock to other investment vehicles and maybe decide on something that can give you a better rate of return, but also taking into consideration your risk appetite. So how do we calculate our annual rate of return? We are going to make assumptions here because we are still somewhere in the middle of the year. Let's assume that we've gone through the 12 months period, a full year period. So how do you calculate that? You are going to look at the price at the beginning of the year and the price at the end of the year to calculate your annual capital gain. So in our stock here, Sechaba, our stock price at the beginning of the year was 22.77 Thebe. And the stock price, we're assuming that at the end of the year as 23.10 Thebe. So our capital gain for the year is going to be 23.10 Thebe minus 22.77 Thebe. That is our capital gain, and that is 33 Thebe. We are then going to multiply the 33 Thebe by the number of shares that we own to get our capital gain for the year. So 33 Thebe multiplied by 6,037 shares, that is going to give us 1,992.21 Thebe. That is our capital gain. And then we are going to add all the dividends that we received during the year. Let's assume that we received dividends of 25,621.3 Thebe. We add that, and then we are going to divide that by the value at the beginning of the year. The value at the beginning of the year is what? The beginning price multiplied by our number of shares, and that value at the beginning of the year is 137,462.49 Thebe. That is going to give us our annual rate of return, and our annual rate of return is calculated at 20.09%. This is going to give you a fair idea on how your stock is performing during the year. And with this information, you can compare it to other investment vehicles. Where else can you get 20% annual rate of return? In stocks. If there's any other tool that can give you 20% annual rate of return, then maybe you also consider it, but you are going to take your risk appetite into consideration. This is all that I wanted to share with you today. I hope this has been clear enough and simple enough for you to understand how we make money investing in stocks. It's not rocket science. It's just as easy as it can be. Please don't forget to leave a like and a comment for me. Thank you very much for your time. I will see you in another video.